Greetings, everybody. This is Christopher Messina coming at you on Valentine's Day 2022. It's freezing here in Florida, so I can only imagine what it's like up north. Joining me today in the studio, we're delighted and honored to have Larry Thompson, who joins us. He is the current chairman of the board of LedgerX LLC. Larry, welcome to the show.
Well, thank you, Christopher. I appreciate your inviting me to be here, and I'm happy to participate in this discussion.
Awesome. As you know, a bit about Messy Times, we strive to provide some kind of deep dive insights into parts of the market that most people wouldn't get a look into, right? But crypto is kind of a hot space right now for people who don't know the markets very well. So maybe you could tell us a little bit about LedgerX and FTX and how those interact and how you came to be involved.
Well, it's interesting that you mentioned FTX because yesterday during the Super Bowl, I think we had one or two commercials.
Yes,
which is
phenomenal ad.
Yeah. Well, I thought they were pretty good.
Yep.
We also had a number of our key employees who were at the Super Bowl, including our founder, Sam Brinkman-Fried, who was sitting at the Super Bowl and enjoyed his time. Let me first talk about what LedgerX LLC is, which does business, by the way, as FTX US derivatives. So we got a DBA, although the official legal name is still LedgerX LLC. We are an exchange. We are a derivatives exchange. We have a license from the CFTC to be what is called a derivatives clearing organization, the DCO. And we clear and settle trades that are done in Bitcoin futures and Bitcoin options, as well as Ethereum futures and Ethereum options. These are all fully paid for, meaning that there is no leverage at all in these securities. So from that standpoint, they're pretty safe bets in terms of what's happening. LedgerX itself has been around since 2014. It's been a DCO or a SEF underneath, which is a self-regulating organization underneath the CFTC since 2017. I got involved with the company in late 2019, was the interim CEO for a brief period of time. And one of the things that I did that I'm most proud of is I hired our present CEO, a fellow by the name of Zach Dexter, who runs, what is now FTX US derivatives. And Zach was one of the original founders of LedgerX. He was the one who came up with a lot of the technology that underlies the structure of what the company is and how it works, along with a couple of board members who are also still involved, with the company. But in this case, they sit on the board as opposed to being in management. Zach is also on the board of the exchange as well.
For those, very quickly, just for those people who might not really understand the difference between, say, trading cryptocurrencies out of their own wallet or trading on a derivatives platform, derivatives exchange, what would be the main difference if someone's going to come trade on FTX?
Well, we don't trade the currency itself. We are, as the name implies, we are a derivative. So a future is a derivative of something else, of an underlying asset. In this particular case, if it's a Bitcoin future, the underlying asset is Bitcoin.
Right.
And what you trade on our platform and the futures is a derivatives of that, right? So the future is a derivative of Bitcoin or an option on it as well, because we do options as well. So that's really the significant difference. Now, there are two other parts of FTX. There's FTX International, there's FTX US that actually trade the currencies directly.
So if you wanted the transactions.
So if you wanted a transaction directly trading the currencies, you would go to FTX US or FTX International and be able to get a position, buy the currency and be able to trade the currencies back and forth. You can't do that on a derivatives operations such as ours, because we only deal in futures and options, even though it's in two currencies.
That's interesting. Now, are you seeing, has there been consistent growth of one, either the derivatives platform or the spot trading? Has one of those always been growing faster than the other, or has it kind of been variable over time?
Well, I think, right now it's hard to sort of measure the derivatives platform versus the currency platforms, predominantly because we only can trade, fully paid for Bitcoin futures and Ethereum futures. So there's no leverage.
Yeah.
However,
you
can do leverage on the other exchanges that deal with the currencies.
Right.
So if you look at the growth of the non-US exchanges, or even the US exchanges that aren't regulated by the CFTC, but may be regulated by a state, money rule or something like that.
Sure.
They probably do a multiple of what our volume is. We are now presently talking to the CFTC. We're in discussions with them about the ability to be able to leverage, to come up with the kind of risk systems that they would feel comfortable with. And we think they will eventually agree to leverage in the derivatives marketplace, become very good and be able to deal with it in some fashion.
For all the big talk, I think this is an important bridge. For all the big talk in the market, that like crypto is a brand new thing, and old school bankers know nothing about how these markets work. Quite the contrary. Like a lot of people very experienced in traditional financial markets have made the transition to making these markets work really well. Your background speaks to that, right? I mean, maybe you could tell us a little bit about where you came from.
Yeah, I'll tell you a little bit about my background. I am originally from the cash markets. I was the vice chairman and general counsel of a company called the Depository Trust and Clearing Corporation. The Depository Trust and Clearing Corporation clears all of what we call the cash equity securities markets here in the U.S. So we dealt with all of the stocks and bonds that were traded on the New York Stock Exchange, on NASDAQ, as well as over-the-counter markets as well. So on a yearly, plus we did money market instruments, we did state municipal bonds, and all sorts of other, cash securities, what is called the cash market. To give you some idea of the scope of how big DTCC was, it ran two clearing organizations, and it had a depository that really dealt with the other types of marketplaces that it had, going back and forth between banks. So on a yearly basis, when I was there, DTCC on a yearly basis would probably clear about 1.6 to 1.7 quadrillion dollar value of securities. Now, you think about what a quadrillion is, because that's the next question you were probably going to ask me, is a quadrillion is a one with 19 zeros behind it. So, think of it as being 1,000 trillion.
So in congressional terms, that's just a rounding error on how much they're willing to spend every day.
You might call it a rounding error, but it just speaks to the size, the scope of the transactions.
And so this is the big invisible to most people underpinning of the plumbing that makes all this.
You never see
possible.
All you know is that your securities that you buy from your broker are going to be settled. Right now, they settle on a T+2 range. When I was there for most of my career, they settled on a T+5. Then starting in the late 1990s, it settled on a T+3 decision. And then starting in 2012, and more recently, we went to T+2. And I think there's a move afoot now to really move the markets more to a T+1, settlement cycle. Yeah. All of that is an effort to take the risk of having to hold those securities for a day or two after you've traded them. You're going to need some kind of capitalization. That's what happened in the securities markets, as you may recall, a couple of years ago. Actually, I guess it's less than a couple of years ago now. with Robinhood.
Right.
And they had a big hit in terms of what was happening with their margin accounts. And the margin accounts were all to make certain that you had the right amount of capital to make certain that you could close all of the transactions that you had to at the clearing corporations. And the clearing corporations that they were talking about were all ran by DTC.
Right. And so for
DTC,
those people, for those people unfamiliar, if you've got an E-Trade account or Ameritrade account and you log in and you buy 100 shares of whatever, it instantly shows in your account that it's in your portfolio. But in reality, what settlement means is that the trade is actually done. The people that used to have the securities have now given them to you, your cash has gone to them, and T+2 means trade date, meaning when I just did it, 2 days later, it's actually settled. So for convenience sake for retail investors, the portfolio shows that it's done, but in reality, it's not done. But the risk associated with that 100 shares is de minimis, whereas an institutional investor buying $1 billion worth of stock, there is going to be some risk of settlement. So that's where institutions like the DTC step in to smooth that risk, underwrite that risk, and make sure that they get paid a little bit to make sure that the market runs smoothly.
Well, you described it perfectly. That's exactly the issue that you have. But you got to remember, even for the retail brokers and clearing agents, even though your transaction was 100 share and maybe somebody else's transaction was 150 shares and somebody else's was 500,
right?
Altogether, when you look at all of those trades put together, they can be a pretty massive number. So they can look very much like an institutional trade that's being done in the millions of shares on a daily basis that you're going to have the appropriate capital to settle those with. So I agree with you. It shows up instantly in your account at your broker dealer. Or if you want to have a physical certificate, you can get a physical certificate, because there still are people who want to have their certificates in paper. Maybe they put them in their own safe. Maybe they put it underneath the mattress. But those are the possibilities. That all goes to why, by the way, you have a settlement that could be less than trade date, because everybody wants to know, why can't you settle all of these transactions on a daily basis? The fact of the matter is, DTC settles about 35% of all of its transactions on a daily basis.
Right.
However, because you're dealing with a very complicated world situation, there are shares that are being traded in Europe on European exchanges that list American stocks. Microsoft, for instance, you can buy, I'm sure, on the European stocks. You also have the Asian markets. The Asian markets are well ahead, as well as the European. They're all ahead of the US markets. So in order to be able to deal with that and also deal with stock loans and other transactions that you have, you need to have time for the entire environment to be able to function as a whole, which is why you have trade date plus a couple of extra days in order to make certain that all of these other transactions can occur.
Now, here's a question that I think relates potentially to the bridging of that long experience with traditional financial market structure and emerging kind of DeFi, very popular concept, or crypto. How has that deep experience with the realities of how capital flows and asset flows move around the world, how has that informed what you've been able to do, or why you were brought in, I guess, to LedgerX and into the new crypto environment? Is that a big piece of it?
Well, I mean, first of all, crypto has the great advantage of being a new technology in the financial services industry. You got plenty of other technologies that are called legacy technologies, which can slow things down and may not have the latency of some of the crypto blockchain technologies that we have. So in the crypto world, by and large, first of all, everything is dematerialized. You don't have physical certificates. And at the moment, anyway, even though you have international exchanges, as well as US exchanges in all of this marketplace, it's still a relatively small market.
Right.
If you look at the total size of the crypto marketplace, it's probably around $2-3 trillion altogether.
Yeah.
As I described to you earlier, DTC alone settles, about, actually now I think last year it settled well over $2 quadrillion dollars worth of securities. So if you looked at it from a standpoint of just comparing 2 trillion to that, it's a minuscule dollar amount.
Right.
And yet, because it's a new technology and it's dematerialized, it can work on a 24/7 trade day. So the trading takes place every day of the week, 24 hours a day, and it settles all of those transactions fully electronically all the time.
Right. So it's
So,
continuous.
from that standpoint, it just churns out the ability to deal with it. And it's a different market structure altogether, which is why you will have so many other different changes that you'll have to have, and why I think crypto is such a challenging new technology and can be used to speed things up in a traditional world as well. So blockchain technologies will be used, I think, by fintech companies and other exchanges to speed the delivery of products back and forth to the marketplace, to bring in other parts of the marketplace users who probably don't benefit from the market structure as much as you have right now. So you take Africa, for example, you don't have in Africa the kind of traditional banking structure that you got in the US and in Europe. So, a new technology such as the blockchain technology and crypto can really fill in a major, I would say, a vacant area in terms of the whole banking area and grow there. I think the same thing is true in South America.
Yeah, and even closer to home in the Caribbean.
And also here as well. I mean, the fact of the matter is, it's a growing technology. You can see from the fact that, as I mentioned earlier, yesterday with the crypto ads that were done at the Super Bowl, how much excitement there is about this, and especially in the minority communities and the communities that have not been well served by traditional financial markets.
That's a huge point, right? I just heard it briefly, but Arawak X in the Caribbean is a brilliant new exchange. And part of the great realization, we had a great chat with their CEO and CTO a few weeks ago, was precisely that one of the downsides to the centralized traditional market structure we've got is, without being deliberate in any way, dispersed populations without a lot of capital aren't worth serving, right? There's no point in putting a big bank branch on an island in the Caribbean that has 9 people living there, right? You have to travel to Nassau if you want to, even if you're in the Bahamas and those, many islands, you have to travel somewhere where it's actually worth it financially to build a bank. But with the decentralized financial model, it is, as you say, dematerialized, and it promotes a massive degree of financial inclusiveness for populations that just weren't kind of worth serving for a myriad reasons. And it's one of the most brilliant things it can do.
I'm glad you mentioned the Bahamas, because the Bahamas actually happens to be the home of our international business. So FTX International is now based in the Bahamas. And one of the reasons that it's based there is that the government very much embraced crypto and the new technologies, because they understood that they were being underserved by the traditional financial markets
badly
because of the many islands that they had, and that crypto could fill in a lot of that activity, and has done so extremely well. So they're very crypto friendly in terms of their new legislation. And I think the US will find there's real value in having similar legislation for the crypto markets to encourage innovation, because this is what this is all about. It's encouraging innovation. It's really trying to make certain that you can get as many people who are being underserved into the financial marketplace so that they can get the same values as everybody else. It's really democratizing the financial marketplace.
That's brilliantly put. And part of what I've always found so fascinating in having these kind of market structure discussions with people who do not specialize in understanding the underpinnings. To them, money is just a thing you use to buy stuff with. It never occurs to them that there's an infrastructure and a cost to maintaining the systems that allow you to swipe your card at the gas station or at Costco, right? And to me, crypto or decentralized finance is the right solution. Like things like the Grameen Bank, everyone got very excited about in Asia for microloans, but they were still wrestling with this problem. You've got a wholesale banking infrastructure cost structure to manage the fact that you're only making a loan of $8 doesn't change the paperwork that goes on. It's the same paperwork as if you were making a $90,000 loan. And that's what made this so difficult. But by removing all of those infrastructure costs and that overhead, suddenly it is possible for me to make loans of between $9 and $14 to 1,000 people. It's as easy as typing on my computer. And that is for those people who are part of the revolution already, if you want to call it that, for those people who are already involved, it is crystal clear. But for those people who've never thought about it, when they do hear about it, like a light bulb goes off, like, oh, yeah, that does make sense. No wonder why there isn't a Chase, Citibank, and a Wells Fargo on an island with 800 people, because it's not worth it, right? You can't justify the cost. But
right.
So,
and you also see more and more, because of the laws that have been put in place, the anti-monitoring laws and the rest, those costs to the large institutions have actually been going up.
Huge.
So the large institutions, as their expense base has grown, are more frequent to want to, do things in a place where they're simply not going to be able to get the best bang for their buck.
Right.
Crypto, on the other hand, of course, it can cut through a lot of that paperwork and make it a lot easier to deal with, especially when you use, the blockchain technologies to get rid of the intermediaries that you may have in those marketplaces. You can cut back significantly with those expenses and make it much more worthwhile for the large companies even to get into those businesses, which is why you see more and more fintech companies that are now beginning to partner with large banks and small banks in order to do business. So you get a company like Figure, which announced that they are now in a partnership with New York Community Bank here in the New York region. And that I think is something that you're going to see more and more of. The fintech companies, the blockchain companies, Figure has a blockchain technology called provenance that they're using to help settle trades, private trades, that is, but also to help out with HELOCs, home equity loans, which they can do a hell of a lot cheaper because of the blockchain technology that they utilize as well. So, and you see the New York Community Bank taking advantage of that so that they can compete more effectively with the very large multinational banks such as Citi and Bank of America.
That is really smart. One thing I don't want to be one of those people suggesting people go back and look for Super Bowl ads, but Larry David's ads for FTX was hilarious, absolutely hilarious, and it was very illuminating because in the way that only Larry could deliver. But without this being an ad for FTX, in general, By
the way, I posted on it saying, since my name is Larry,
right,
that I was very happy with the ad.
It was very well done. His journey through history was magical. It'll never take off. But for those people who've heard all the terms, maybe you could give a quick primer on what's the difference between a cryptocurrency, a smart contract, a non-fungible token, NFT. As you guys look at this, as you're helping your management team think about how they build their business, what are the core components of those three? How do they all relate to the blockchain? Maybe a quick thought on that would be very helpful for everybody.
Well, look, cryptocurrencies are exactly what we're talking about. These are currencies that are not your traditional fiat currencies. They're not dollars, they're not yuans, they're not euros. You could have a digital dollar at some point. You could have a digital yuan. In fact, I think there is a digital yuan at this point.
They're working on that. Yep.
And you may have a digital euro. Those will be a digital version of a fiat currency. Bitcoin is not a fiat currency and probably won't be a fiat currency, except in very small countries like El Salvador. I think that's the first place where it is. It's actually the national currency of El Salvador, Bitcoin, but it's having some issues there, quite frankly.
I can only imagine it's a risky move. I understand why they made the move, but it's a risky move.
I understand why they did it. I'm not quite certain if they fully understood it. Blockchain is a technology which underlies all of the cryptocurrencies, and there are many versions of those. And everybody who comes out has their own version. there's almost as many versions of blockchain technology as there is blockchain companies. And at this point, there are probably thousands of companies that use the term blockchain in various ways. Essentially, what it is it's a, think of it as a network where you will have a node or noodle or whatever you want to call it on a chain, but instead of everything being sent to you and then you having to approve it, you get a decentralized group that essentially will reconcile everything at the same point in time. So everybody on that chain will get the same information at the same time, which cuts out a lot of reconciliation costs that you can have, which now underlies a lot of the expense burden that you have in financial marketplaces. Because I got to send it to you, Christopher, for you to look at it. You may have to send it to somebody else for them to verify that information before you send it back to me saying that it's verified. And by the time you send it back to me, if anything has changed anything at all, I'm going to have to verify it one more time.
Right.
Which means that I may have to incur another additional expense. And if there's been any other transactions, then we're going to have to go through that reconciliation process all over again. That is a very expensive proposition. Whereas I have a node on a blockchain and it's automatically updated all at the same time, makes things a lot simpler, we can move on. So an NFT is what they call a non-fungible token, right? And it could be anything. It could be a piece of art. It could be a sculpture. And often it is these days exactly those things. Non-fungible token is a way of building, I think, wealth in this industry. And more, all of the operators of Bitcoin are now offering NFTs as a way to get more people involved, because you can build wealth in a very quick fashion by buying into it as opposed to trading the currencies themselves.
Right.
And the currencies themselves, as you've seen, can really float in terms of what their value is. So you had Bitcoin, which was 2 years ago may have been at 20,000. 6 months ago was close to 70,000. Now it's back down under 45,000. I believe it's about 43,000 today. And that means that its value fluctuates. It's great for the traders. It's great for those who,
wonderful.
who love volume and volatility, who make money on that. It may not be good for an individual who wants to hold a store of value for a period of time. That may be the differences that you want to talk about, which is why trading futures may be a different way of getting there, because if you can trade a future, you don't have to worry about what the underlying derivatives changes, because you're making a bet as to what it will be either in the future, or be it increase or be it decreases.
Right.
You buy futures either way, and options the same way, in order to protect your underlying position that you may have. So if you have a cash position in Bitcoin, is you got Bitcoin that you're holding, and you want to protect that in some fashion, being able to go to a DCO like FTX US derivatives means that you can build a position to protect that position in the future, from the kinds of volatility that you can have with the underlying derivative asset. Hopefully that makes
very quickly, because it's important. I want to make sure that for those who are not familiar, they really get this point that if I've got a token that I've issued as a currency or whatever I'm calling it, whether it's based on Bitcoin, my own protocol, I can create, Christopher coin if I want to. I can issue that out. If everyone wants it, great, they'll buy it. If they don't, they won't. But all of those, if I issue 1 million Bitcoins or 1 million Christopher tokens, each one is interchangeable with the other. It's the same thing. It's like I've got this dime and you've got a dime. We swap them. We both have the same dime. Whereas the whole point of a non-fungible token is it's unique. It relates to
it's very unique.
Particular token.
It's not fungible by its very nature. It says a non-fungible token.
So you could do things like real estate title to commodities, title to artworks.
Title to artwork is one of the key areas that you talk about. You can buy a token in that, NFT in art, which is where it's really had seen its value grow.
Yep.
Because artwork is not fungible by its very nature.
Right.
Whereas, the example I use in terms of fungibility is that if you go to your bank and you deposit $1, you know that you have $1 at your bank. What
Right.
you don't know is what dollar do you have.
Right. The chances of giving you back the exact same physical dollar bill are almost zero.
Absolutely. It is zero.
Yeah. Yeah, exactly.
You'll never see that same dollar bill again.
Yep.
And that really, I think, describes the difference between fungible and non-fungible. Fungibility is really good for cash instruments and for Bitcoin in general, because you can deal with that in a fungible mass.
So because of that, I didn't want to interrupt, but because of that, in terms of what LedgerX, FTX do, then all of the futures and options that are traded on your platform have to be fungible tokens, right? You can't do it, or can you do futures contracts on NFTs? Is that an idea that you guys are playing with?
Well, I don't want to talk about what the products are, because that would mean that I'm getting ahead of what
Sure.
management people are doing.
Right. But conceptually, that's something
they're thinking about, how do you do a futures on a NFT?
Right.
I'm sure they've been thinking about it. Whether or not it's going to be a product line that somebody would want to do, that's a different question.
Tricky.
But obviously, the idea of a future is you want to protect your future value. So if there's a way that your NFT is going to drop in value, and you can try to deal with that by putting an option out on it, or putting a futures position on it, that would be something I would think that we would want to do, because that really is what futures and options are meant to do. That's what they've been doing traditionally. But remember, what we do in the futures industry is not, we deal with commodities by and large. We don't deal with currencies, although you can do interest rate futures.
Yeah, as a proxy, right?
That's a product on them, but it's regulated by a part of the regulatory structure in the U.S., the Commodities Futures Trading Organization, the CFTC, which really it's got its start with hog futures,
eggs, chicken, the broiler market.
Yeah, you could buy pork and things of that sort.
But not onions. I love that. The peculiarity of U.S. securities laws is the onion futures market was such a debacle during the great crash that they outlawed. So right now, futures exchanges, you cannot list a futures contract on onions, of all things. It's not allowed. You could potatoes, scallions potentially, but not onions. It's illegal under federal law. I love that.
Well, I am very familiar with the CFTC, but even I didn't know that fact that you just told me about the onions. That's
a bizarre peculiarity of our legal system. No trading in onion futures. They'll go right to jail. I love that.
Good, excellent.
But sorry, go ahead.
You go ahead.
The last question on NFTs, I think the other thing that people may have heard of is fractionalized NFTs, right? So there's a DAO is similar to that, where here's a piece of art, say, and very few people could afford to buy a $75 million NFT based on a Picasso from the Blue Period, right? But if you split that up into 1 million fractionalized NFTs, well, maybe 1 million people could buy $7.50 worth of that.
It's interesting that you mentioned that, because one of the products that we do offer is we do mini Bitcoin. So we take Bitcoin and we divide it by 100 different positions.
Right.
And that makes it, allows it to be a lot cheaper for the individual to get back into that marketplace, because they don't have to buy a full Bitcoin in order to do business. They can buy a 1/100th of a Bitcoin and still be able to do business. It's the same concept for the NFT, where if the dollar amount is $1 million, most people are not going to have $1 million, but if you can break it up into 10,000 pieces, maybe they'll have, or actually larger than that, maybe 100,000, maybe they'll be able to buy it at a fraction of the cost that it would have been. And so you can broaden the marketplace and allow more people to participate in this marketplace. That's a good thing.
Yeah.
As I said, democratizing the marketplace is a good thing for all markets. It makes people understand what's happening. it's good that people have to educate themselves like you're doing in this show, educate people about the different marketplaces that are out there, the financial markets, because a full understanding by the public about, the marketplaces, especially financial marketplaces, will make them smarter, much smarter consumers. And hopefully when they all retire at some point, they'll all be retiring with enough funds that they don't need government intervention to help them out.
And well, this has been really awesome. I'm sensitive to your time. Maybe a quick sense for those people who are thinking about this. What's your estimate of how many sort of crypto-like exchanges exist currently in the US and globally? Some are regulated, some are not. Like, do you have a sense of what that looks like? It hasn't been exploding.
Yeah, we have some sense of it. I mean, obviously, every day you get a new crypto exchange coming out, most of which are not regulated because, they're either in countries that don't have a regulatory structure, such as the one in the US,
right?
Or, they're under a different kind of regime that may be legal in their own particular country, but where other countries that have much more sophisticated regimes, like the US, may not recognize or allow their citizens to participate on those exchanges. So, that's an issue that you got to always be careful about.
Sure.
So I think there's about 1,000 exchanges out there at the moment. I mean, in the US, it's only a handful.
Right.
You name all of the big ones. They were all doing commercials yesterday. Coinbase
and the like,
FTX. We were all there, and FTX is a relatively new exchange. Ledger X, as I mentioned, only got its license in 2017.
Right.
So if you look at it in terms of an age, it's less than 5 years old.
Right. And like so many of these innovations are, right? Just because it's young doesn't mean it's not the right
thing.
And
that's the great thing about innovation. You should have regulators in the marketplaces who really push innovation and are going to allow innovation under the current rules. And what we found is that the CFTC is a very good regulator in that fashion. They were the first ones to set up Innovation Lab. Now, they've been followed by other regulators in other countries and other regulators here in the US. So the SEC has now set up, a sandbox or an innovation lab as well for fintech companies and for, exchanges to think about what it is they want to do and how they can do it and to grow underneath the regulatory regime that we have here in the US. And in the US, we have a complicated one.
Oh, yeah.
A lot of countries has only one regulator for both the derivatives marketplace as well as the cash marketplace. We have two regulators. And if you think about the banking structure as an overlay of all of that, you have the banking regulators on top of it. And then you have the FSA, the Financial Securities ability right on top of all of that.
State regulators, so and layers.
It's a mishmash of regulators here in the US.
Yep.
There's about 14 or 15 different regulators, not counting the state regulation.
Not counting the states, right.
So, when I was at DTCC, we dealt with, I think, just in the US, about 180 different regulators. But we had an international business.
Right.
So if you looked at the regulators that we dealt with in Singapore, and in Europe, Hong Kong, China, you're talking about another 200, 230 regulators. So we had a full-time business called the caring feeding of regulators.
Caring feeding of regulators. I was going to say it's a miracle that you all aren't alcoholics after dealing with all those regulators. Woo. And what I find fascinating, having been a student of regulatory history and having played my own small role in some regulatory developments over the years, is how often it comes down to the people who happen to be involved at the time, right? The CFTC was chaired by Chris Giancarlo at the time that the CME, Chicago Mercantile Exchange, first came to them talking about Bitcoin futures. Had it been chaired by someone of a different ideological bent who believed more strongly in government intervention versus kind of let sophisticated markets determine their own way, we might already have a whole different picture right now. He wrote that great book, Crypto Debt, and he gave some personal history about how all that developed. And I'm hopeful that the current crop, Gary Gensler with the SEC is a smart guy. He was also a former CFTC chairman.
He was.
but we watch carefully, and we certainly participate in any comment periods. But I look at, for example, the process going on here in the US for looking at crypto-related regulation, and I happen to know what it's like in, say, Abu Dhabi. And Abu Dhabi, frankly, has a clearer, simpler, cleaner view of how crypto should be regulated. Now, that can come down to size of the population, right, and not an overly complex government. There are some virtues to a monarchy, not many, but decision making is one of them. So, do you have any thoughts for, where do you see the pitfalls versus the opportunities for how? I know this is a loaded question for someone who's involved in a regulated business, but the general sense of, do you get the sense that a lot of good, thoughtful care is going into a good regulatory structure here?
I do. I have been, in talking to the regulators that I've spoken to at the CFTC, as well as the SEC, as well as some of the banking regulators, I have found them to be extraordinarily thoughtful individuals who really care about the US financial markets and understand that one of the key strengths of the US capital markets, the thing that has underpinned their strengths for so many years, is the fact that we've been innovators, that we've been, very, very allowing of innovation to grow. To me, it's no accident that the largest internet companies have all developed here in the US.
Right.
Microsoft, Google, Facebook, you go down the list of all of them. And the innovation allowed by the regulators allowed those companies to grow. And I think with that care is still there and will influence how they think about crypto. You see it at the CFTC, as I said, with the innovation lab that they got. Gary Gensler, I think, is a very thoughtful individual at the SEC. He understands capital markets. He was a big player in the capital markets. He understands what happened at the CFTC and why it was a good thing. I mean, the SEC has a much larger agenda than the CFTC does.
Right.
So it's got to do a lot more with probably a lot more people, which means that things sometimes are a little bit slower. But I think with the careful thought of good leaders at all of the levels that we're talking about, and especially in Congress, because Congress has got to play a role in this as well. They got to pass the right laws. They got to make certain that the regulators are listening and being thoughtful in what they do. I mean, they're the regulators of the regulators, and so we gotta make certain that that is something that is happening as well. And in order for all of that to happen, is you got to make certain you give all of the regulators, including Congress, the right information. So if you've noticed, there's been lots of testimony on the Hill by the cryptocurrency industry, talking to the various agencies, but also talking to the committees of jurisdictions for both the SEC and the CFTC to educate those legislators about what needs to be done and coming out with thoughtful white papers on that. We at FTX have done that enormously. We've come out with 3 or 4 white papers, thoughtful white papers in this area. And we're being led by a very thoughtful young leader, Sam Brinkman-Fried, who is very thoughtful, careful in this area, believes in regulation. One of the reasons that, he came to the old Ledger X is that he really thought that our approach of making certain that we had the right regulations behind us and having the right regulators behind us was a very thoughtful way of doing things. So I think with all of that, I'm very hopeful that innovation will be protected here in the US and our financial capital markets will continue to be very robust.
On that note, which I can't think of a higher one and a more optimistic one, we're going to say goodbye for now. We look forward to having you back as developments grow. But again, thanks so much for taking the time to come on the show. I think people are going to get a lot out of this. People who don't know much about the markets and already exploring it. So thanks again, and enjoy the rest of your Valentine's Day. Hopefully it's a little bit more romantic than this was.
Thank you. I appreciate it. And have a good day. Thanks for having me again.
Ciao.